GM, welcome to the weekly outlook. Now, we've had a crazy week, so I've made sure I prepped this one to be an absolute banger for you guys. Make sure you stay till the end. We'll be going through the markets, positioning, which has changed wildly, going through catalysts and risks, my portfolio, my plan going forward, and the trade of the week. So, without further ado, let's dive into the markets. Bitcoin, Ethereum, Total 3, and others. So on the monthly time frame, you can see just how wild the disparity is between not just Bitcoin and altcoins, but also majors in general. Bitcoin has remained in its range despite one of the biggest flushes, one-day flushes I've ever seen in crypto history. It really shows you what Larry Fink said back in 2023. There is a serious flight to safety in the markets. Investors are allocating their capital towards the majors, whether it's crypto, it's Bitcoin. And you can maybe start to add ETH in that conversation. Personally, not yet until it breaks out to new all-time highs. Same story in the stock market. It's the Magnificent Seven. They've led the way. Low cap stocks have underperformed massively when you look at the Russell 2000, barring, of course, AI stocks. Investors have been allocating their money into the high quality stuff, the proven assets. Very simple as to why. We don't have the 2021 insane liquidity conditions where stimmy checks are being given out. You have everyone locked up in their houses trading. We don't have that. We haven't had that this cycle. So everyone this cycle bet on the same thing happening again, allocating to altcoins, calling for an altcoin season every day. And well, we saw just how little liquidity altcoins had on Friday night. So very interesting to see the disparity. Bitcoin coming to, I know, 101k on futures exchanges, on spot exchanges, around 106, 107. Whereas you look at Total 3, it came all the way back to the summer reaccumulation level. So this is everything excluding Bitcoin and Ethereum. You look at the others chart, it went back to its bear market levels in 2022. Whereas Bitcoin didn't even go back to its early 2025 levels, let alone 2024 levels. And you've got everything outside the top 10 in general going back to its 2022 bear market levels. It shows the disparity more than ever, how you can have a Bitcoin bull market and an altcoin bear market. I've been saying this for weeks and weeks, months and months even, really when I started coaching all you guys, that you have to be super selective with your assets, and this is why it's best to adopt that trading mindset from here on out. Now, if we go to the weekly, what are we seeing? Well, of course, toppy formation here with the sweep after sweep after sweep, but again, we've remained in range on Bitcoin. Ethereum. We've tried to break out of the high time frame support resistance level, potentially going to avoid closing back inside it, which is going to be your hopium for bulls. However, would expect this chart to come back down in the coming days, weeks, months to retest this wick and prove demand, much like Bitcoin, much like most altcoins. But this is overall, again, a sign that Bitcoin held up much stronger. Ethereum held up much stronger because when you look at something even like SUI, went all the way to 0.95. And if you go to the Binance chart, which is meant to be the most liquid exchange, went all the way down to 0.63. Absolutely wild stuff. So you have actually seen Ethereum hold up better than most of the altcoin market. And that shows that there is at least some respect, some strength in ETH. It isn't just a coin which is worth nothing. And the reason for this is simple, guys. There's too many projects, too many new projects. You've seen a multiple higher number of projects than last cycle, yet not as much capital to chase it. Again, there's not 0% rates, there's not money printing, there's not the same liquidity. Fed are still doing QT, let alone QE. So when you have the number of crypto projects multiply by 10x and the amount of capital going around reduced by 20-30% to last cycle, it doesn't take a genius to figure out what happens. It's too few capital chasing too many projects, and that's why there is this flight to safety. That's why Bitcoin has held up well. That's why Ethereum has held up better than most altcoins. That's why alts outside the top 10 went back to their 2022 levels, whereas alts within the top 10, so just excluding Bitcoin and ETH, they came back to their 2025 lows instead. You're seeing that investors get smarter and smarter each cycle. They're not going to fall for the same crap that they did last cycle, because in 2021, you had the blockchain bubble. The problem is now you have new narratives, you have AI. Investors are flowing their money into every new AI startup, every new AI stock. That's where capital's going. It's not the blockchain bubble again. In fact, you're just getting what seems to be a lower high bounce this cycle on most altcoins. If you check the majority of altcoins, you just see this lower high after 2021. Even Ethereum, although better than most altcoins, it only managed to take its all-time high this cycle. And most people would define a bull market as an asset making new highs, which Bitcoin has, BNB has. Again, if you want to use some hopium, you can say Ethereum, Solana, they also fit under that bubble, potentially XRP too. But again, that's stuff outside the top 10 where, let's be honest, who actually knows what it does? And I'm not saying it's going to be like that forever. I'm sure there will be some amazing altcoins that come through over the next decades. However, the market has voted against that. And you just have to accept that it is really what it is. And you've got these huge wicks which just showed how little liquidity was on the books. And what was really surprising was even on exchanges like Binance, these coins went crazy low. If you look at something like Ondo, look at something like Atom went to literally almost zero on what is seen as the most highly liquid exchange. Now, was there some sort of manipulation? Was there something which blew up? I'm sure there was. I have no doubt that throughout this cycle, there has been some market maker who's been trying to patch their wounds and essentially survive whatever mess they got themselves into. And a little tweet from Trump with some China tariffs exposed their patched up wounds, and they may have blew up. That might be what you saw here. Of course, all the exchanges went down and the books were just completely empty. That's what allowed price to trade all the way down to here on your altcoins, absolutely wrecking anyone on 2x leverage or more, wiping so much money away from retail traders, which isn't bullish. You do get bullish liquidations, like over here on Bitcoin. This was a bullish liquidation, led to higher. But this is not that. This is coming off a down move on many coins. It's not coming off an up move like Bitcoin was here in 2021. And it's really just absolute exhaustion on the bull side. And I want to show you this chart. So if we look at the data, so the positioning on the market, it gives us a cleaner picture. So We got Bitcoin at the top. Bitcoin from last cycle, 2021, to its peak has risen 80%. Open interest, so longs and short positioning on Bitcoin, at the same time rose 160%. And when you look at altcoins, it's a different picture. So altcoins since 2021 to the all-time high of this cycle, open interest has risen 200%. Now, Bitcoin open interest outpaced its price increase from 2021 all-time high to the current all-time high by 2x. The point is, at least both assets and the open interest alike made new highs. Whereas altcoins, they went up 200% in open interest from the 2021 high to the current all-time high of open interest. Yet, tell me how many altcoins made a new all-time high this cycle and broke out. Not just swept it like Solana and ETH. Tell me how many altcoins since 2021 made a new high and trended up even 100%, doubled from their 2021 all-time high. Maybe BNB. Other than that, you can't find me any. So what has happened here? What's happened is altcoins this cycle, their trends have been built off leverage. It's longs, long in their longs. It's people using cross margin, putting their collateral onto the exchange and longing their spot to lever up and make essentially more gains in air quotes. And that has now been found out. The altcoin market has been propped up with leverage, and it took one cascade, one event where no one could get on the exchange, where something's blown up and it's catalyzed liquidations on everybody. Anyone 2x or above, gone. As I said, Bitcoin literally this week, from open to the low, down 13%. And of course, on perpetuals, it went to 101K, so down 18%. So people on 5x and below leverage didn't get liquidated on Bitcoin if you bought the Pico top. Held up stronger to an order of magnitude compared to altcoins. And it really shows where we are at in the cycle. So I'm going to show you another chart. Altcoins, they had their chance for another easy mode. In the red box, this is where smart money accumulates. Price goes sideways, volatility drops, it does nothing. So retail traders, they all check out. They're bored. They don't want to be involved in crypto because it looks like it's dead. But that's when your smartest players actually accumulate. And because they stayed around during the boring times, they get to enjoy the exciting times, the easy mode. That's when retail come back, they get excited, and then anyone who bought here, smart money, they sell and use that exit liquidity from the new joiners of the market. It's not a crime to take profit. And we know this is how it works because look where price comes back to. Oh, it comes right back to where smart money accumulated, back to their entry prices. This is where they stop dumping, because why would you dump if price is back at your entry? And that's where you get the bottom. You see accumulation again, goes sideways, low volatility, leads to the next easy mode. You then see retail come back, Trump gets in, everyone gets wrecked again, trading meme coin mania, Trump launches a meme coin, goes to zero, markets come down, smart money who accumulated here, dump, and we get our next bottom, where we have a more volatile range, but still smart money accumulating here after the tariff drama, and what should have gone into an easy mode over here instead has now invalidated that and flushed right back into where smart money accumulated. That's again where this week stops, no surprise, but it didn't break out to new highs, so the accumulation has failed. This is why it's most likely over for most of the altcoins this cycle. You just got to say it how it is, guys. I'm not going to give you the hopium that a lot of YouTubers will do on the net. They're going to give you a bunch of crap, which you guys know how much I hate because, again, me personally, when I started as a beginner trader, I listened to them same YouTubers. I got wrecked. I blew up accounts. I had to work my ass off, building businesses, starting again from scratch, from nothing, until, of course, now where I'm in a fortunate position, very successful from trading, as you guys know. It took me years. I wish I had someone to tell me all of this. And it is just as simple as that. You have to know when it is over. And that's fine because from there, we're just looking for our next accumulation period. We're looking for the next time we see smart money accumulation. And that may be weeks, that may be months, that may be next year. However, if you can survive, this is where 90% of your bull market gains are made. So we have invalidated the easy mode. Easy mode is not coming. We instead have failed that, couldn't produce a new high. So you've got to expect chop here. Sure, we can have bounces, we can rally, but price is likely now to fail and have to fill in the majority, if not all, this wick, depending on the altcoin, and reaccumulate. Because retail are gone. When retail are gone, it's only smart money left. So now we've had a bounce here. That's your automatic reaction. No surprise to see a bounce after a huge liquidation. That's fine. But are they really going to mark it up to new highs after you've just taken out all of retail? No, because then who do they sell it to? If retail are all wrecked, who's going to buy the top? So that's why you can see a lot of these altcoins, they're going to chop around, maybe bounce, maybe squeeze shorts. But eventually, you're going to see retests of these wicks. It happens time and time again. Look at these wicks. Liquidation day. Yes, we bounce. Yes, we rally. Great longs within here. And there's going to be great longs coming in the next few weeks. Great trades coming. That's why we are traders and we actively manage our portfolios. But again, price comes straight back to the liquidation a few weeks later. What is this? Another liquidation day. Where does price go? Bounces initially, but comes straight back to the liquidation area. And eventually, it bottoms in this general area. You get that low volatility where smart money now begin accumulating. That boring price action after retail get liquidated. Notice how it doesn't just go to new highs. No, guys, we have to see some sort of reaccumulation again on your altcoins. And same for Bitcoin. Again, what do you have here? Liquidation wick, and then you get the retest. Liquidation wick, and then you get the retest over here. Look at these. Zoom in. This is much earlier in the cycle, so it looks small, but these were massive moves because the prices of the coins were so low. Liquidation wick, retest, retest, and we go. And throughout all of this is your reaccumulation. That's what we got to look for from here. Got to see some sort of retest of the liquidation wick, whether we bounce from now, because we very well can. And then once we see charts start to trade sideways again, whenever that may be, may go into 2026. Can you survive till then is your question. It's what you got to ask yourself, or are you just going to be coming in at the last phase of the cycle every time to be the exit liquidity for the people who stay around in 2022, 2023, like me, like all the guys? Or are you going to make it till then and have the opportunity for life-changing gains when you can spot the reaccumulations in this box over here and then play the next huge trend when smart money here can then start dumping on retail later on? That's what you've got to be in it for. I'll take you to this chart here. You have all of the phases marked out for this cycle. So you've got the bear market phase. This is when FTX crashed, retail completely gone, and only smart money is left to accumulate. I was here, I was buying Bitcoin, and then in the recovery phase, I started looking at altcoins. The altcoin I actually chose to buy was AKT because it fit in the AI narrative, and you had this beautiful accumulation over here. That was the trigger. Simple. I said, what's the narrative right now? It's artificial intelligence. Can I express that in crypto? Answer was yes. You had coins like this that had gone sideways, showing clear smart money accumulation. So when you started breaking out, that was the clear sign. Okay, this is probably going to mark up. Did I know it was going to mark up? No, but it ended up doing 7, 8x from my entry. And point of me showing you that is because the best time to buy altcoins, the next best time to buy altcoins with a long-term view is after the next markdown, which we've begun to have with the liquidation day, could be more to come. And then after a reaccumulation, after you see low volatility, sideways price action, and you take it a layer further, if you can find the right narratives, then you're going to find the winners. But you have to survive and make it till then, because then we get into the recovery phase. Some retail start to come back. And then you get into the bullish phase where retail really do begin to come back. AKT in 2024 actually topped during this bullish phase. So I'll show you this chart. Go to the weekly. Just to show you that the life cycle of altcoins is not the same as Bitcoin. So this was the smart money accumulation over here, which I was buying up. And then over here in 2024, this chart topped. Down only ever since, while Bitcoin's been up only. And this is the fate of every altcoin. You have to play altcoins for what they are. They are short-term narratives. And once they have the pump and dump and retailer or wreck, you have to move on to the new narrative until there's an altcoin that actually generally is seen as valuable by investors. And sure, maybe that is ETH, maybe that is SOL, since they have actually hit their 2021 cycle all-time high. They have shown that they can at least reach it. Maybe it is BNB, although we know it's heavily manipulated by the Binance whales. But sometimes manipulation's good, as you can see. It's not all bad. Everyone complains about manipulation this week, but no one complains when BNB goes up due to the fact that it's held by 90% of Binance world who are letting it go up. So altcoins have a life cycle. You have to survive to be around to play the life cycle, and you have to understand the life cycle. You now don't buy AKT. When I sold it, which was around $4 to $4.4 where I actually exited, it's since been down only, just in a downtrend. No signs of accumulation, just consolidation, markdown, consolidation, markdown, rather than consolidation, markup. And of course, you've got all of this supply, which is unattractive for investors to buy. And that's what you have to remember now from here. A lot of charts are going to be unattractive until they can build reaccumulations, until they can form a new narrative. We're in the euphoria phase. All the signs are here. Bitcoin Treasury Company mania, ETH Treasury Company mania, everyone copying Sailor. It's so simple in hindsight, but I've been mentioning this chart for weeks and weeks before this liquidation event. So, got to remember where we are in the cycle and protect your portfolio. Adopt a tactical approach accordingly in that sense. Looking at some more charts, so Bitcoin high time frame support resistance levels. Mention how Bitcoin is strong during this liquidation. Notice how it's just come back to its high time frame support resistance level. Yes, we failed the breakout, so that is now your warning sign of a high time frame top. But we have still held this high time frame support level at the moment. Now coming back for a third retest isn't great. Notice this was one, this was also one retest, and this was two retests, so 3 retests after a sweep of the all-time high twice. It shows signs of distribution. Therefore, if we lose this high time frame support resistance level, that's likely what's going to catalyze the next downtrend and the next potential, what we can call bear market. But who knows what a bear market's going to look like for Bitcoin. As I've been saying, bear market's not going to look like 2022 on Bitcoin. That's what everyone's so scared of, is this, but you don't have the same players. You don't have FTX stealing customers' coins, leveraging up. You don't have 3 Arrows Capital leveraging up. You don't have all this crime. Instead, you have sophisticated institutions on Wall Street, yes, using leverage, but not in a degenerative way. They're using debt, they're using smart strategies like the Sailor Company strategy. Now, will they still have pain? Yes, I'm sure, but cycle's not being lifted by literal crime as it was in 2021. And you could see that. Chart went up only, no basing at all. You had one small consolidation within the entire bull market before the top. That is not sustainable. Cause and effect. Whereas this cycle, you've got consolidation. Again, consolidation. Again, consolidation. This allows weak hands to flip into strong hands. This allows smart money to accumulate. It's been way more efficient than last cycle's 3-week consolidation over here before the top, because everything else was up only. And that's why last cycle came down just as hard. Whereas this cycle's been efficient. It's unlikely to have that 2022 style bear market. So I don't think this is likely. But the trigger to look for a bear market is as follows. It's losing this accumulation, which was previous distribution. We flipped into accumulation. If we lose that, then you're likely looking at some sort of bear market. I call it, to be honest, a macro cycle for Bitcoin, because I think the macro trend support is going to come in. If a super cycle is the word you want to use, you can use that. Where lose this zone, then I think this 100-week EMA can be found as support. If not, potentially the 200-week EMA can be found as support. These will keep rising as the weeks go on. That's what I'd be looking for. That's where I'd be looking to allocate for potential buys in what you can call bear market, but for me, I just call it opportunity. The more experience you are as a trader, the more you understand. You welcome a bear market. This is where your generational entries are made. This is where you look at your altcoins and identify the reaccumulation. So that's what I'd be thinking in terms of Bitcoin. Lose 102 to 109, this accumulation box, and you're going to head to some of your lower trend support bands. Then look, maybe this 50-week comes up, and maybe we do just never lose that zone, and we just come up into there and continue on high. That's a possibility, and we'll trade that as it comes. I'll be updating you guys every day, every week. Make sure hit like, subscribe, comment if you enjoy this content. Appreciate every one of you supporting this channel. But otherwise, I'm looking at these lower macro trend support bands to come into play and potentially provide support on BTC. Because the 50-week, that's been support once, twice, leading to new highs. Therefore, next band is the 100, would offer a nice deeper dip, and the next band is the 200. Currently, 50 weeks being respected, so potentially we could hold it, move to new highs. But again, if this accumulation box is lost, I'd expect us to go into some sort of deeper retracement in the coming months, and that's going to set up your next beautiful buys on BTC. So those are the scenarios. Get above this distribution zone, which we've currently failed. That's 124.5k. Get above there, flip that, then sure, we'll trade momentum longs. That's fine. We've got a plan for all scenarios. Don't need a bias in the markets. Then we can trade that. Otherwise, looking for these two scenarios if we lose that box. Now, zooming in, where is Bitcoin bouncing from this week? Well, huge liquidation. Many exchanges, futures exchanges went to 101, as I said. We're bouncing, of course, from the high time frame support resistance level that I've been sharing with you guys every week. No surprise to see that. Now we're coming into resistance between 114.8 to 116.5. Known resistance from this distribution volume profile, from the September volume profile. We had the volatile scenario, which I said you don't want to see because volatile price action in a consolidation is more indicative of distribution, as smart money use this volatility, the shaking, flipping of emotions from retail traders going long, short, providing exit liquidity for smart money for whales to get filled on their big orders. That is more indicative of distribution rather than accumulation, where it's quiet. You don't have traders flip-flopping. You have traders not knowing what to do because price is just going sideways. That leads to markup. This volatile stuff tends to lead to markdown. So high time frame support resistance level, your primary support I've been sharing with you guys for weeks now. Lose that and you probably lose this range and follow one of my paths that I showed you over here, blue or red. Hold that, and we are so far. We can get some nice bounces this week. We can trade to the long side and see higher prices. Smart money would love nothing more than to make everyone who couldn't get in on their exchange at 103 to start FOMOing in at 120 and then dump on them again. And I think it's going to be good to look for low time frame short setups on any rally that we do get. But otherwise, high time frame support resistance is holding for now. Lose that, then you're expecting lower and a mark down, because then we're losing this range, and really you've got this 107k level that is the low of the range. That is your final confirmation, because what's this? This is a trap above the range, false breakout. Well, we tried to mark up to new highs, therefore this is the low of the range, where we've also had a false breakout where we tried to mark down below the lows of the range and failed, to be fair. Therefore, break down from that level, expect a mark down, as this confirms its distribution. Everyone who bought is underwater. Same regard, mark up from here. This can be accumulation, who knows? I don't think it is, but that is the invalidation if it's going to be bullish. You're going to mark up above the August all-time high. Again, I doubt that happens. That's very unlikely, but they are your confirmation levels. Got to be objective. Look at all scenarios, as always. Primary support, high time frame support resistance, holding for now, which is good. But definitely now risk of lower to come, potentially. The main reason for that is stock market. Well, this dump came with stocks dumping. It wasn't crypto only. I shared this box with you and I said, whichever way this breaks likely dictates the next move. And we got the down move from this box and stocks were closed. So crypto takes the brunt of the move until Sunday night when the CME opens. So interesting to see on stocks. Everyone has lost their mind and everyone's flipped completely bearish due to Trump's 100% tariffs, or his threat of 100% tariffs from China. So if this chart continues marking down when it opens on Monday, that is a sign that this is a huge deleveraging event, because it's quite consensus now that stocks are bearish and that they're going to go lower. Therefore, when something's consensus and it still plays out, that shows leverage is just way overly long. But what can actually happen, because it's consensus, is a bounce before a flush later on. And that bounce can, of course, also come from higher. So all you got to do is move this up. Remove these paths for now, they've played out. And say, yeah, potentially stocks are going to bounce. Take out some shorts that are going to get overly bearish before distributing. It can find supply here. Potentially that comes again from lower. Or if we do just mark down, that's going to be very indicative that longs are just overly positioned and there's way too much leverage. So I'd keep a strong eye on the stock market to see how it acts this week. Do we get a bounce? Or do we just continue flushing down after that close? So that's the stock market reaction. Of course, you saw the dollar hit its range low. I told you guys this is a potential risk off warning. Now you got to see, does it reverse here? Or do we flip it and have to go to 101, which would be further risk off when the dollar's getting stronger, because that means investors potentially choosing fiat, choosing dollars over holding assets. That's why it's risk off. And gold. Gold's, of course, offered a very different dynamic this cycle, as being the safe haven, as being what China keep on bidding. It's making new highs after new highs after new highs. So gold is closing at the highs while stocks had a sell-off, Bitcoin had a sell-off, crypto had a sell-off. Of course, interesting to see when this opens too. Do we continue marking up on stocks, on gold, sorry? Or do we have to come back to the daily bands where we potentially find support? Or do we even form some sort of top here and break the daily market structure where we then consolidate either for higher or for potential lower? So that's what I'll be looking at in terms of the market. Now, altcoins, this is your total market. You've seen price come back to the 50-week EMA on this total market. Again, the fact that you can't find an altcoin that has really made a new all-time high since 2021, but open interest went way above, is very telling of the cycle. It's been Bitcoin led. Bitcoin's been really carrying this total market cap chart. And when we look at total 3, excluding stablecoins to the real total 3 chart, it's not made a new all-time high. It's now risked that lower high, as I said, and this wick has flushed very deep. Others, even worse, lower high, and we've now flushed back to the bear market lows of 2022. So yes, bounces are here, but now you're probably going to see chop and at least a retest of the liquidation wick, where then you look for, are smart money reaccumulating, or are we going to go into an extended downwards period? So that is it in terms of the markets. Now, moving on, positioning. I've touched on this already with you guys. So we've seen altcoin open interest go up 3x, but there's no altcoins that have gone up 3x since the all-time high. That's why you got such a big flush. It purely was leverage propping up the altcoin market, and that got found out. Whereas Bitcoin didn't have as much leverage, has real demand, a real buyer. Even the likes of ETH, as I said, didn't flush that much. Still near its all-time high. It's got a real buyer. And that's because it's got ETFs. It's got the bid. It's got the institutions actually taking it seriously. It's not just retail traders and market makers fighting each other. There is generally demand for the underlying asset. And you really see that disparity now. You see funding rates on altcoins are negative, meaning spot demand is just not coming in. Even with the flush, spot demand is struggling to come in on altcoins, whereas Bitcoin funding has gone back to green. And this funding rate just shows the premium between perpetual futures and spot. So perpetual futures trading at a higher price is green, spot trading at a higher price, this goes red. And altcoins are still in the negative on funding, so spot demand hasn't come to bid in yet, which is very telling again of the cycle, where we're at and where the strength is, where the real demand is in your assets. Key to know positioning, because positioning has really shone a light on everything in crypto this week. You've got to accept it if you want to make money. Now, Bitcoin, what was the level I showed you guys? It was 112K. I said, got a big build-up of open interest. It's not closing when we get below it. And when we tack the highs, not much open interest decreased at all. In fact, open interest was at all-time highs. So clearly, shorts did not get stopped out here. And longs, in fact, were actually just getting over leveraged. This open interest kept building up. It wasn't targeting shorts. Therefore, finally, that's why you saw this flush, which wiped out at last this huge buildup that we had. There was just too much leverage in the markets. A lot of people, again, they'll say it was because of Trump's tariffs. They'll say it was because of this, but no. There was a false breakout days before Trump ever announced 100% tariffs on China, or the threat of it. Chart showed the story. There was too much leverage. We went up only, and that is simply just not sustainable. You need to build bases. You need to have smart money reaccumulation ranges for proper markups that hold. So where are we at now on Bitcoin? Well, open interest has come back to levels it was at in December 2024. Now we are not trading at those levels. So if we move this down here, move this down to here, let's go to the weekly. we can see price today is trading higher than the open interest at the high of 2024. So still a small divergence, still a little bit of over positioning on the long side. Obviously, you've got automatic buyers coming in after the liquidation flush, whereas open interest is decreasing prices above that same 2024 high level. So interesting to see. Obviously, you want interest to be in line with the price. That shows harmony. Therefore, I do still think this position after this liquidation has to get consolidation, reaccumulation at least, to digest this move properly. Therefore, I do think markets most likely to see retests, whether it's the purple path, 50-week EMA holds, if not losing it, going for that deeper correction. And again, invalidation of that is just getting above the August all-time high. That's fine. There's going to be bounces this week, and I'll go more through that in trade of the week, but positioning shows that still we haven't had a proper reset. We're still trading above levels and trading below the same level on open interest. So positions are getting flushed. There's less interest in the market, and it's not quite in harmony yet. So very interesting to see the positioning after a day, after a week like that. Moving on to catalyst and risk. So we got the US versus China and the government shutdown. So Trump made a 100% tariff threat on China. Question is now, is Trump going to follow through, or is he backing off? And we just got a tweet that came in from Trump. He said, don't worry about China. It will all be fine. He said it was just a mistake, essentially, which is probably the best thing he could have done. I think that's why you're seeing this rally in the markets today, because you've had a decent headline from Trump, because really it was a lose-lose situation for him. Because if Trump fully backed off now after threatening China with 100% tariff, that would show weakness. And if Trump went through with the 100% tariff on China, that would nuke the US stock market and people would flee from the dollar. And the problem is China has the upper hand because they've been accumulating gold. They've been accumulating gold. They're prepared for tariffs. They're prepared for US weakness, dollar weakness. Capital has been flowing into gold over the dollar as your risk-off asset. China's been the one buying gold. We know that. Therefore, it was almost a lose-lose situation no matter what Trump did. So he has done the best thing here and just basically said it was an accident, which is the smartest option he could have chosen because it plays down the whole situation now, which is why you see the rally. But keep an eye on how those headlines move because they can potentially dictate this next stock market move and make America look weak. Now also you have government shutdown. You have CPI and PPI that are tentative, which again causes more uncertainty what's going on with the US. So they are the catalyst and risk for now. So far, so good. Trump has actually came out with the best he could have done out of a bad scenario that he put himself into. And the question is, are traders now complacent? Because a lot of people don't want to listen to Trump anymore. They say, oh, he always says things and goes back on it. But the problem is, while yes, that may have been true for a while, eventually it's not true. Eventually he will go through with something. And if traders are complacent and the consensus is that everything Trump says, don't believe it, that's what creates the risk of that one time where you should believe it. Because if everyone's positioned for Trump calling him out as the boy who cried wolf, then when the opposite happens, that's what leads to your huge volatility in the markets. When everyone's positioned long, that's when you're at biggest risk of a black swan. It's the same. When something's consensus, everyone's positioned for it, the opposite happens. So keep an eye on headline risk. So far, he's trying to patch a wound with some band-aids, and it's so far having an okay reaction. Let's see how this progresses because it seems to be a lose-lose situation. Otherwise, whether he follows through with the tariffs or whether he backs off, it's going to hurt either the US stock market through following through or looking weak by backing off. So keep an eye on that. Now, I want to dive into an update of my portfolio. So as you guys know, in August, I took full profits at 121.1K on my Bitcoin cycle backs, exited them all. So that put me in 100% cash. So throughout this crash, I've been fully protected, portfolio fine, not lost anything. And the reason I did that is because I saw the signs of the cycle going into euphoria. We were heading towards, if the 4 year cycle is going to be a real thing, we're in the last year. We're in that phase where euphoria's here, you got all the signs in. It's the time of the cycle. If 4 year cycles are still going to play out, who knows? It's the time where there could be a top. So I made the decision after I saw them take this liquidity and use it as distribution instead of leaving liquidity like we do in these bullish consolidations. Instead, taking liquidity like we did here, typically leads to sell-offs. And that's why I chose to de-risk. That's why I've chose to operate that tactical approach in my portfolio. So instead of 80% of my portfolio being in long-term holding and 20% being for trading, I switched to 0% in long-term holding and 100% in my trading portfolio. So my trading risk per trade increased by 5 times to offset the lack of long-term spot exposure. So instead of having that long-term hold in the later stage of a cycle, I have been operating with a multi-day, multi-week hold mindset, having clear risk-defined invalidations on every trade as I normally would, but just even more so, only taking trades when triggers are hit. And I'm really using the trading portfolio to get my long exposure. Because being in 100% cash, as I have been since 121.1K, is the equivalent of being short. That's why I don't add leverage shorts on top, because that's adding more leverage. Being in cash is already short because cash gets devalued and debased. But sometimes you have to protect your portfolio because, as I said, people like me who accumulated during 2022, 2023, it's time to take profits. This is when we dump. It's not a crime to take profits if you were that guy who was around during this period. And there's Bitcoin bulls, as we know, who bought sub 10K around 2020, or even in 2018 who are selling now. We've seen all those dormant wallets, and it's okay. They're allowed to sell. You're allowed to realize profits. That's why we're here. So it's a reminder that managing risk on your portfolio is essential. You just can't be going into the later stages of the cycle, DCAing more, and at worst, adding leverage onto your DCAs. You saw this week what happens to those traders who do that without a stop loss, without risk management. They got wrecked. And that can happen at any time and is a reminder. But I want to say it's not an accident, the fact that I was 100% cash during this entire move. It comes from analyzing the charts objectively, having a trading plan for all scenarios, not marrying my bias or marrying the fundamentals or story around an asset, just objectively looking at price action. And that is how you have to do it, because once you make gains in the bull market, you're at biggest risk of losing them in the immediate term. Protecting them is half the job, if not more important than the job of making money. Managing your downside risk is, I'd argue, 2 times, 3 times more important than getting the gains, because everyone wants to focus on the gains. No one wants to focus on the downside. And that's why I saw all those signs that I need to be in cash. And that's how I'm going to continue, is adopting that tactical approach where, sure, Bitcoin, if it breaks out above 124.5K, I'll just get long and I'll trade it. Otherwise, I'll be taking day trades, scalps, intraday setups within here with my trading portfolio, sitting in cash, waiting for opportunities in the blue path, red path, so that I can get those generational entries during the reaccumulation phases, whether it's on Bitcoin, whether it's on altcoins, whether it's in stocks. I want to be there and have cash for those periods, because opportunity is diminishing. Is Bitcoin going to just 2x from here? Highly unlikely without some sort of retracement and reaccumulation. So when the odds are stacked against you, you have to simply make the decisions and understand it's okay to just trade it. Play it level by level. And that has played out extremely well for me. So going forward, here's my plan. The long and short term. I approach this bull market based on a 4-year cycle. Until proven otherwise, that was the best play throughout 2022, 2023. Accumulating those altcoins and Bitcoin throughout those periods in the bear market where price went sideways. So my portfolio setup throughout this cycle has been long-term Bitcoin, so that's 80% of my portfolio, where I have sold already now at 121K around a probable cycle top. And at the time, that was a probable cycle top. Do I know if it's going to be the cycle top? No, of course not, but it's probable. And all we can do is trade off probabilities. Now, that long-term Bitcoin was mostly 100% Bitcoin this cycle, but also, as I mentioned, I had a few periods of holding a percentage of altcoins like AKT. Also, a few periods holding some memes in this portfolio split, but mainly it was Bitcoin. I made 8x on AKT and on memes. I actually lost a little bit of money chasing some of those narratives, but all in all, very profitable on the long-term portfolio. That is now, of course, in cash. My trading portfolio makes up 20% during the majority of this cycle, and that's for short-term perpetual futures. And the goal of that is to outperform buy and hold Bitcoin, and then rotate the profits into long-term Bitcoin. Now, my long-term Bitcoin, that side of my portfolio is 0%, as you know, and I'm looking to buy around probable macro trend support, so the 50, 100, 200-week EMAs. My trading portfolio is 100%, that's where all my cash is, so I use this to mainly gain upside exposure in case I'm wrong, because maybe I am wrong, maybe I didn't sell around the probable cycle top, and we are going to break out and mark up. But also, I use it for shorts when setups arise and day trading plus scalping. So, adapting through the cycle and what comes next. The charts show the cycle is over for alts in terms of new highs. So waiting for the next accumulation phase on alts or a reason to switch sectors to start trading stocks is what I'm going to be doing. And until then, I'll continue trading tactically. That looks like the optimal plan for me from here on out, and is going to protect my gains as well as allow me to still get upside exposure if I am wrong and we do break out higher. Simple, objective plan. And this is what you guys all need to form for yourself, so you know what to do at all times. You never are left holding the bag on a day like Friday night. So moving on, trade of the week. So yesterday I made a morning markets video diving into this deeper, but we're starting to trade into the H4 gap over here. And there are a few scenarios. So either we reject at this M5 order block. This was a 5-minute order block, which I'll show you actually on the charts over here, which we are currently starting to get above. So this order block is the last green candle, which led to the liquidation flush. We found resistance at it. And now, initially found resistance at it, but starting to try trade through it. See, green path is if we can flip that level, we can potentially get a big squeeze. That again comes with positive headlines potentially coming through. Trump already has begun that, which is why you're seeing the start of this rally, and we can see price trade pretty quickly through this gap because everyone who FOMO'd or lost a bunch of money is now going to lose their mind if markets rally. So yes, markets can be high time frame bearish and still rally. And from there, I'd be looking for low time frame reversals to trade any shorts. Again, waiting for confirmation before I take those shorts, not just blindly shorting, looking for sweeps, market structure breaks, failure to return patterns with the lower high, and trading the right side of the V, not the left side, guessing. Red path would of course be rejecting this order block and coming back down to the high time frame support resistance, where as soon as we break the high time frame support resistance, if it's a high volume candle, I'd look to trade short for a momentum move down. And orange path is if we get to 107.2K in the red path scenario, and we actually instead bounce and reclaim the high time frame support resistance level, then I'd look for this to be a trap potentially, and reclaiming that level, you can look for longs back up to some sort of resistance level that potentially forms in the immediate term now. So those are the three paths, either a low time frame, reversal short, a momentum short with the red path, or a reclaim long with the orange path. Expecting price to get choppy. It's going to be heavily dependent on the headlines and the catalysts and risks as to whether we can have a positive reaction from this liquidation to generate what I think is going to be exit liquidity and further selling, because people are going to lick their wounds. They're going to get out, and they can, on any price rise. That's why I think this is the best setup on the green path, looking for low time frame reversals. But barring that path, any breakdown, I'm looking for momentum shorts to trade the momentum lower, because we could unwind. That's on the cards. And if we reclaim, then we just trade it long after that reclaim has confirmed. Very simple, and that sets the trap over here. But as I said, daily closes below 107.2k. That is now trading below the distribution range, and we can mark down much lower. And daily closes above 124.5k, we can potentially mark up. So that's the trade of the week. That's the weekly outlook. I hope you guys enjoyed. I'm losing my voice, if you couldn't tell, but had to get this video out for you. Please subscribe, like, comment, boost the algo of this one. This video took me long to prepare. I think it's a banger. I hope you guys enjoyed it. I'll see you guys in the next one. Let's make some money.